Hey everyone, John Henry here, Slingshot Futures Trading Group. Thanks for joining us for today's video. Before we start, make sure to subscribe to our channel so you don't miss out on any future content. While you're here, give our video a like and make sure to leave us a comment with any questions you may have or suggestions for an upcoming video. If you'd like a more in-depth look into our trading day, we'd love for you to join us in our live trade room for 3 days with our free trial. A link for that can be found right in the description area where you can register for the trial, or visit the page ssftg.com and you can register from there as well. So now let's get into today's video. So one of the biggest questions that I get pretty frequently is, what is the best time frame to trade from? Should I use minute charts? You use tick charts. Should I use tick charts? How about volume charts? Should I use those? There's all these different types of time frames, but it kind of depends on what you like doing. There's definitely a time and place for every type of trading chart, in my opinion, but it depends on your trading approach more than anything else. When we're talking about tick charts and volume charts, just so we're on the same page, a tick chart is basically every trade. It doesn't matter if that one trade was 10 contracts or one contract. One trade counts as one tick. So a 500 tick chart is basically just cataloging the movement from the start of 500 ticks to the end of 500 ticks. Now, if you look at a volume chart, obviously the volume chart is going to be based in volume. It doesn't matter if one person was buying 1,000 contracts or it was 1,000 people buying one contracts. It's a 1,000 volume chart, meaning that wherever it moved while those 1,000 volumes were traded, that's where the candle plots, and that's kind of how a volume chart shows up. So the reason I like tick charts and volume charts is mainly just because they're great for looking at a more in-depth psychological scalping type perspective. When you're looking at tick charts from more of a structured type, it can give you some benefits in terms of where the market's opening or closing, etc. But realistically, the tick charts and volume charts, in my mind, are more... They're better suited for scalping because they give you more of a psychological view in terms of what's going on. It is based on trade volume or, volume, whatever you want to call that. Just say volume. So it gives us a little bit more of an in-depth look in terms of what's going on behind the scenes rather than just over a specific period of time. Now, if you zoom out far enough, a chart is a chart is a chart. They all look the same when you zoom out far enough. You have all of the same swing highs and the same swing lows. But what you can utilize these types of time frames for is zooming in a little bit closer and seeing what's going on right this second, right? What's going on here? What are the buyers thinking? What are the sellers thinking? Remember, we're looking at a very fast time frame. We're looking at scalpers or more intraday traders like you and I, assuming that's your type of trading as well, of course. So those are the types of traders on faster time frames that are going to be more apt to trade off of, well, a 500 tick chart or even a 30-second chart if you're looking at time-based charts. Now, one thing that time-based charts are fairly good at is looking at market structures. I'm a big fan of market structures when it comes to looking at the overall movement going on, because that gives us zones of interest based in time. In time, when we're talking about market structure, is very important because if it's an accumulation zone, well, realistically, we want the market to spend a lot of time in a certain area. So time is actually very important in this case. So accumulation, support, and resistance zones, those types of things become massively important and much better off on time-based charts. Although you could still draw channels and wedges all the same, your closes and opens will be a little bit more important to give you an idea of where volume is going to start coming in because it's all based in time. I'm a bigger fan of using time-based charts for horizontal support and resistance. I find that is kind of its best use personally, or looking at it on a faster time frame like a 5-minute chart, only trading regular trading hours type trading. Regardless of how you utilize it, when you're talking about minute-based or anything based in time, daily charts, weekly charts, 1-minute charts, 15-minute charts, whatever, they're generally going to be a bit better for structural type trading, pattern type trading, because that's really kind of what they come down to. It's all based in time and how long market spends in certain areas to create the pattern. If you're looking at more of a scalping time frame, then you're definitely going to be zooming into a much faster time frame like a tick-based chart, looking at kind of the introspect of what's going on behind the candles and more of a psychological view at that to give you kind of more insight in terms of what's going on in some of these moves. So it really comes down to what your personal preference is in terms of trading, but both of them are definitely viable. It's just where they're better suited for. Obviously, time, like I said, is better for structure, and price action, psychological trading, better in the tick charts. If you have any questions, feel free to shoot me an email, jhb@ssftg.com. Until the next one, though, enjoy, rest up, and we will see you all then. Thanks.